So what are some great sin stocks to invest here in 2019? Sin stocks have always had a taboo around them. Many investors choose not to invest in sin stocks simply because of ethical reasons. But if we put that aside and we look at these stocks from a pure business perspective, you can see that there's actually some pretty good potential here, and they could possibly be very good long-term holds in your portfolio. So today I want to cover 3 questions really for you guys. The first is, what sin stocks would I personally look at and consider investing in? The second thing I want to go over is the dividend yields for these sin stocks and figure out what exactly the dividend yield is and if those dividend yields are sustainable. And of course, the third, being an investor, you want to also see the growth potential in these stocks. So we're going to take a look at that as well. So let's start off here with the most popular sin stock, which most of you most likely have heard of, and that's Altria, ticker symbol MO. So this is a stock we actually covered on the channel quite a few times recently, and it's one that I think is at actually pretty good value right now. So some background on Altria if you're not familiar. They're traditionally a cigarette company. However, over the recent years, they've expanded to more modern forms of consumption. And this includes things like vaping with their investment in JUUL, and of course some investments in the green sector here with their investment in Cronos. So this is a company that does recognize that pure cigarette market is declining year over year, which is why they've made efforts to expand their reach to other sectors, which in my opinion is a very smart move. So Altria currently sits at a market cap around $94 billion, and they're actually pretty good value as well, sitting at around a PE of 14 and a forward PE of around 10. And honestly, when looking at these numbers, it almost feels like this stock is priced with absolutely no growth ahead of it, which I disagree with. Its dividend yield is currently sitting at around 6%, which is a pretty high yield for any stock really in this market. But it does have a larger payout ratio, which is something to keep an eye on. I do, however, think that with their diverse investments that this payout ratio will reduce over time, but this is a red flag to make note of for now and just to keep a close eye on. And we're looking at their dividend yield history. We're currently sitting at around a yield that we haven't seen in nearly a decade in the stock, so there is some value here to consider. But the big story here with all these sin stocks that we're going over here today is their dividend growth history a good story, and is it something that we want to look at for a potential dividend growth play? Well, here you can see Altria has been raising their dividend for 21 consecutive years, which doesn't make it a dividend aristocrat, but it does make it a very strong dividend growth stock. This means that even through the tech bubble in 2000 and the recession in 2008, this company continued raising their dividends in order every single year, which is a healthy sign for future raises as well. This graph here shows how quickly they've ramped up their dividend payments with an average rate of around 10% year over year, which makes Altria actually one of my favorite dividend stocks of all time. The monthly chart here on Altria is a reason I think it's a good entry price right now, because we're testing the 100 moving average, which I believe will hold as very strong support for this stock. We may dip a bit below it to around $40 or so to test the 200 moving average briefly, but I believe we see higher prices soon enough as we establish this bottom. I think that this company actually has a lot of growth potential ahead of it, especially with their investments here in JUUL and Cronos. But I don't think that these investments are going to pay off overnight. It's going to be a very long-term play to have these segments of their business actually contribute a significant portion of their income. For now, I still think that it's going to be the cigarettes that dominates this company, and that's where they're going to get most of their money from. But they do recognize the shifting market, and I do think that they're probably in the best position out of all the stocks we're going to talk about today to take advantage of the shifting demand and shifting mindset when it comes to cigarettes and smoking. And what Altria and all these other companies really that sell cigarettes have done, which is pretty smart, is that even though the volume of sales for cigarettes has been declining year over year, these companies have just been raising their prices on the cigarettes year over year, so their income has been growing as a result. But eventually, of course, it's going to reach a point where it doesn't make sense to keep raising prices. Consumers are not going to pay those prices, which is when these other investments are going to start to pay off. Anyways, now let's move on to the second stock here, which is Philip Morris International. So this is a very similar business to Altria. They focus on their cigarettes. However, recently they have begun efforts to shift away from a smoke environment and go towards a smoke-free environment. They're working on some heated products to eventually replace traditional cigarettes, and they believe that they have a winner here. Unlike Altria, they currently don't have a direct investment in the green space to my knowledge, which is a big reason as to why I'm not as excited on this stock. I believe personally that investments in this sector is the future for this industry, And I think that sooner rather than later, this company will recognize that and make an investment similar to Altria. But as of right now, I'm not really happy as a potential investor that they're not really looking at this space. And the problem I see here is that if they don't act quick enough, that competition will actually leapfrog them, and they're going to be in a very tough position, say 5 to 10 years from now. So Philip Morris is actually a large company. They have a $120 billion market cap, and they have a current PE of around 15 with a forward PE of around 14. So really, you are getting some pretty good value here with this company in terms of their PE ratio and the valuation, but it isn't as good as Altria. The yield for this company is close to 6%, however their payout ratio is close to 100%, implying that they have recently paid out almost all of their earnings in dividends. This of course is not sustainable, so let's look closer at their dividend history to find out what's going on here. You can see that they've been growing their dividend for the last 11 years, however growth rate is less than 5% year over year, implying this is a very slow growth stock. For comparison, remember Altria actually had a growth rate of around 10% year over year, which is twice as fast as this company. And when looking at their yield history, we are higher than average, but it's still not really a big bargain here based on previous yield history. So what we really have here with Philip Morris is a company that isn't diversifying themselves quick enough. They aren't growing their dividend quick enough to be considered a good dividend growth stock. And they have a pretty high payout ratio currently, which makes me question the sustainability of this dividend. The charts here show that they're also hovering around the 100 moving average on their monthly. And I think this consolidation phase continues until the sector as a whole starts moving higher. So really, bottom line, for me personally, Philip Morris International is not an investment I would consider. Doesn't really have that dividend growth potential. Starting yield is good, but I'm looking at the stocks like in the 5, 10, 15, 20, 30 years out, how they're going to bring in income for me. And this company does not really provide much potential there. You may have a pretty good shot here to take advantage of capital appreciation, but again, I'm not too thrilled that they aren't investing in sectors that I think are going to be future growth. So for me personally, this stock is not an investment. Now moving on to our next company here is a more international company, and that is British American Tobacco. So this is a British company that traditionally, like the other companies we talked about, has their core business around cigarettes. However, they are a lot more global company, and they as a result have tons of exposure in the international market. In terms of innovation though, I would say this company actually comes in below Philip Morris, so the worst that we've talked about here today, because I don't really see anything in the pipeline or on their website or when reading through their articles that states that they're actually doing something innovative and new and exciting for the future. They are dabbling in vape-related products, but again, that's nothing really different or new compared to the other two companies we talked about. But who knows, maybe they are working on something massive behind the scenes. This is a massive company, so we'll have to wait and see if something does come out, but as of right now with the information available, not too exciting. So this is also another large company, around $81 billion market cap, with a PE of around 11 and a forward PE of around 8. So comparing to the other two companies here, you're actually getting the best value here in terms of valuation. But again, that may be because investors are not too happy with the future potential of this company. The current yield, however, is pretty high at around 9%, which for any company in a starting yield is impressive. And for some reason, their payout ratio was not published here on Seeking Alpha, so I had to dig through some other websites and found it to be around 77%. Again, that's still pretty high for me, but it's much better than Philip Morris. But I'd like to see this come down to below 60% in the near future to sustain that dividend moving forward. And currently, the yield that we're getting is on the higher end that we've traditionally seen in the stock. So that is another reason why I would consider looking more into this stock. Their dividend has only grown 1 year in a row, so their history for growth is pretty poor. So it wouldn't necessarily be a comfortable dividend growth stock for me, but it may be a good stock to hold on to when you have that high starting yield, so you can earn income in the short term. But there's always pros and cons to any company and investment, and when looking at the company's chart here, you can see that their stock has corrected the most out of all three, and as a result is giving you some pretty good value. It's sitting below all of its moving averages, but again, most of these sin stocks are suffering the same pressure. And I think sooner rather than later, the trend will reverse, sentiment will turn positive on this industry, and the sector as a whole will become favorable once again. BTI does have the highest starting yield out of the companies we talked about today, and it has a pretty sustainable payout ratio. I'd like to see it lower, but it is pretty sustainable. So they are worth looking into. Maybe have a portion of your portfolio dedicated to this, but I wouldn't necessarily think this would be a massive portion of anyone's portfolio. If anything, Altria would be that position. Now, as you guys know, I love my dividend stocks, and I'm trying to teach you guys with these videos on how to look more into dividend stocks and how to look at potential dividend growth stocks. You gotta remember that it's more than just the starting yield that plays into a decision here whether to invest in these companies or not. And hopefully by looking at this, you understand that even though BTI, for example, had the highest starting yield out of the three, it doesn't necessarily make it the best investment over the long term out of the three. Over the long term, in my opinion, I would personally go with Altria here. Has a good starting yield, has good dividend growth history, and they're growing the dividend at over 10% year over year. So it's a very strong company, very strong brand. And if I had to pick one today, that would be the company that I'd invest in. But either way, guys, hope you enjoyed this video. Don't forget to drop a huge like and hit that subscribe button down below if you're new to the channel. If you want to see more videos like this, of course, comment it down below so I know and I can create those videos for you guys. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.